the month. So financial experts say that they're expecting Finance Minister Tito Mboweni to introduce possible new tax adjustments in his budget speech tomorrow. But for more on this, let's speak to PwC's head of National Tax Technical, Kyle Mandy. He joins us now via Skype. Kyle, good afternoon to you. Thank you so much for joining us. Okay, let's talk about the key question. I think the everyday South African is wondering, what does this mean for personal income tax? Are we expecting to hand some more money over there to SARS?
Well, there's always that possibility, of course. I mean, you're going to need to bear in mind that in the mini budget in October last year, there were tax increases that were announced, 40 billion rand over the next 4 years, with 5 billion rand of that penciled in for the February budget now. The good news is that since then, the revenue collections have performed significantly better than what was anticipated at that time, and it could be at least 100 billion rand better off than what was projected. So the hope is that we won't see significant tax increases, particularly on the personal income tax space and obviously in relation to corporate tax and VAT as well.
Yeah, there was a lot of whispering around corporate tax, so not too much to worry about in terms of corporate tax and VAT. Sin taxes, however, they have a lot to worry about, considering that it's been a tough year for the brewers and the tobacco industry as well. Are we expecting that they could still be pinched a little bit harder as well?
Yeah, I think the likelihood is that they will see increases in those sin taxes, despite the calls from those industries for there to be no tax increases in the current year, given what has happened over the last year. I don't think that you're going to see Treasury relenting insofar as that's concerned, notwithstanding that the valid arguments that they may have insofar as those tax increases are concerned.
Yeah, should we be talking about a corporate tax? I mean, there certainly have been a lot of calls for it, especially from Labour.
Yeah, so corporate tax presents a particular problem. We have a relatively high corporate tax rate, at least the headline corporate tax rate by global standards. It's significantly above the global average, which is around about 24% compared to our 28%. You'll recall, and some of your viewers will recall as well, that in last year's budget, government did announce that they had an intention to reduce the corporate tax rate over time to bring it more in line with global trends, but that is obviously as part of a base broadening exercise, which we expect to continue. So the trend, at least ultimately, should be downwards insofar as the corporate tax rate is concerned, rather than upwards.
Okay, let's go back to our daily lives as South Africans, right? There's been the up and down prices over the past year of petrol. Do you think that we'll see something of a fuel levy added there?
Undoubtedly. There's little doubt that we'll see an increase in the general fuel levy, probably in the region of inflation, so around about 15 cents a litre, I would expect. The uncertain area, though, where we could see more significant increases in relation to the RF levy, which is also levied on fuel as well. I think as everyone is aware, the RF is in a significant deficit. Its liabilities significantly exceed its assets and continue to grow on an annual basis. And with the RABS bill having been rejected by Parliament last year, I don't think Treasury has much option now but to start to increase those levies significantly over the coming years in order to finance that deficit as well.
Yeah, I mean, we've been living in very unpredictable times. Towards the end of 2020, no one was expecting that we'd be seeing increased revenue collection by the taxman, and somehow we did, right? Are you optimistic about how we're going to push those numbers up in 2021?
I am optimistic. And look, there's no doubt that there's a big opportunity for SARS to collect more than they currently are. We certainly estimate the tax gap currently to be in the region of 200 billion rand. And the Commissioner has been calling for additional funds in order to bring in the skills that are required, to invest in the technology that's required in order to start to close that tax gap. And that, for me, is a no-brainer. And I do believe that Treasury will actually make those investments and provide SARS with the funds that it's been calling for. If they do so, then that is where the real opportunity lies to improve our tax collections and our tax revenues, rather than looking to increase taxes on what happens to be a depleting tax base.
Yeah, all we can hope for is that optimism is matched when that money starts to get spent. But let's leave it there. Thank you so much for speaking to us. That's PwC's head of National Tax Technical, Kyle Mandy, talking to us via Skype.